Hey everyone, in this video we're going to be looking at the international expansion of both Amazon and Alibaba and the different strategies they're using to get into those markets. But first, let's do a quick comparison between the two companies. Amazon has a market cap of $810 billion versus Alibaba $370 billion. Amazon employs over 563,000 workers, where Alibaba employs over 66,000. The largest shareholder in Amazon is Jeff Bezos with around 16% stake, where Alibaba SoftBank owns around 30%. And Jack Ma owns around 7%. Amazon has a forward PE of around 66 and Alibaba has a forward PE at around 19. The reason for the massive PE ratio in Amazon is because Amazon has been growing massively the recent years. Just as comparison, in 2017 fiscal year, the whole year, Amazon recorded a profit of $3.03 billion. But in their latest earnings report, Q2 of 2018, so just in the second quarter of 2018, which is just 3 months, they recorded a profit around $2.53 billion. So in just one quarter, they already recorded profits close to what they made in the whole 2017 fiscal year. That is just insane. Both Amazon and Alibaba have grown massively the past few years, and the stocks reflect that, especially Amazon, as Alibaba has pulled back quite a bit recently. But to support their massive increase in stock price, they have to further grow their business. And with Amazon already dominating North America and in European markets, they have to look at international expansion to further continue their massive growth. With Alibaba, they're already dominating the markets in China, and they have been growing massively there, but they have also looked at international expansion as well to further increase their massive growth. Amazon usually looks to acquiring companies, where Alibaba looks to investing into companies. That's not to say Amazon doesn't invest into companies and that Alibaba doesn't acquire companies either, but majority of the time, Amazon looks to acquire companies and Alibaba would invest into companies. From the chart, we can clearly see the difference. But both Amazon and Alibaba has been eyeing the markets in Australia, Singapore, and India as they're primed to really grow massively in e-commerce in the upcoming years. You probably have seen the news with India in e-commerce and their massive growth potential, hence why a lot of capital has been pouring into India recently. It is expected to grow from $38.5 billion in 2017 to $200 billion in 2026. This is due to the fast internet penetration happening in India. India's internet penetration grew from around 4% in 2007 to 35% in 2017. India's urban area, with a population around 444 million in 2011, already has around 65% internet penetration as of 2017. Where there's a lot of potential is the areas in rural India, with an estimated population of 906 million as of 2011, but with only an internet penetration of around 20% as of 2017. The current e-commerce market leaders in India is Flipkart, then followed by Amazon and Snapdeals. Amazon launched Amazon.in in 2013 and plans to spend billions in India to develop an e-commerce network. In the very beginning, about half the customers in India paid cash upon delivery, which wasn't very convenient and had its own challenges. Therefore, in 2014, Amazon invested in a gift card company called Quicksilver Solutions, which then got integrated into Amazon's marketplace. In 2015, they invested in Bank Bazaar, an online financial product search tool, and HouseJoy, which is the on-demand home service marketplace. In 2016, they acquired an internet startup, EM Vantage Payments, which they plan to develop into an Indian e-commerce payment platform. Also in 2016, they also acquired Westland, which is a publishing company. In 2017, they invested in Shopperstop, which is a leading e-commerce fashion retailer in India. Also in 2017, they started offering Amazon Prime and Amazon Now services. Amazon Now is an Amazon grocery and produce business, and all Amazon Now orders are promised to be delivered in under 2 hours. In 2015, Alibaba, on the other hand, invested in 197, which owns Paytm, which is the largest mobile payment service in India. Alibaba and Ant Financial owns about 40% of Paytm. After seeing the early success of Paytm, they invested into Paytm Mall, an e-commerce retailer of the Paytm group. Alibaba also invested into Snapdeals, which is one of the top e-commerce retailers in India. In 2018, Alibaba invested into ExpressBees, an e-commerce logistics firm, and Big Baskets, an online grocery store. They also acquired 18% of Zomato, an online food and lifestyle portal, in 2018. On top of that, Alibaba has acquired UC Web, which has created one of India's most popular web browsers, UC Browser. This allows Alibaba to collect massive amounts of data from India, and they can incorporate this into their other business segments. Alibaba also owns a majority share in a Hong Kong-based lottery company called AG Tech Holdings. AG Tech and Paytm have teamed up to create GamePinned, which is a mobile gaming and e-commerce platforms. The two companies have clearly taken a different approach. as Amazon is trying to grow their Amazon Prime and Amazon Now services in India, where Alibaba controls the mobile payment market as a foothold and has been expanding from there into other segments such as e-commerce, grocery, logistics, and gaming. In Australia, Amazon first introduced AWS in 2012 and launched its Melbourne fulfillment center in 2017 and started offering Amazon Prime and all its features. And we can only assume that as time goes by, Amazon will be opening more fulfillment centers to cover all of Australia and improving their logistics. Alibaba, on the other hand, has been targeting their Chinese tourism in Australia. In 2020, Chinese tourism are expected to spend around $13 billion in Australia. In 2016, they were building out their cloud services and Alipay in Australia and partnering with local businesses to make Chinese tourism experience in Australia more seamless. In 2016, there were more than 8,000 merchants that accepted Alipay, and most of the Chinese visitors have increased the purchase of Australian products after their visit. In 2017, on Singles Day, Australian merchants represent the third highest number of products, just behind the USA and Japan. On top of that, they are expanding their logistics network between Australia and China to better enable business-to-business trades. Since then, they have added 1,300 Australian and 400 New Zealand businesses selling onto Tmall and should continue to grow in the future. In Southeast Asia, the e-commerce market is expected to reach $88 billion by 2025, and to capture the majority of the e-commerce market in Southeast Asia, Alibaba has purchased a majority stake in a Singapore-based e-commerce company, Lazada. Alibaba has been growing their international e-commerce business, and in 2017, it has reached $727 million, representing a 93% year-over-year growth, and Southeast Asia has been the main reason for that growth. To further continue their expansion in Southeast Asia, they have invested in Tokopedia, an online mall based in Indonesia. Amazon, on the other hand, started off with just Singapore in 2017 and started offering Amazon Now with their 2-hour delivery service. And to combat this, Lazada acquired the Singapore-based e-grocery startup Redmart. In Europe, it is dominated by Amazon, as Germany and the UK are Amazon's second and third largest markets. Whereas in Hong Kong, due to its proximity, it is dominated by Alibaba. Alibaba has also made 13 investments in Hong Kong. In the Middle East, Amazon has acquired Souq.com in 2017, and currently only about 2% of the retail sales are currently done online. They have also acquired Wing.ae to build up the logistics network so they can in the future offer Prime services. Overall, we can clearly see Amazon's and Alibaba's different approach to international markets. With the enormous opportunities in online retail as internet penetration rises, it leaves billions and billions of revenue up for grab, and there's much to lose if they sit idle as the other grabs up all the market share. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. And if you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you guys in the next video.